Ouch.
Exactly. That's
Yeah,
exactly how it's feeling right now.
it
It's
is.
kind of
That's true.
wild.
Yeah.
I
I
think
would
that's
get,
why I don't like this time of year.
yeah, I'm not good with winter either. I try to shake it as best I can, but when it gets really cold, I really don't know what to do with myself.
I think winter is great if I'm on a Caribbean island.
Oh yeah, yeah, yeah. That's the caveat.
Yeah, exactly. Like you have to have that space, like then it's okay. Then you can deal with it. Then it's not
That's
quite so
true.
bad.
That's true.
Jodeen, that's when you get a hot chocolate.
A hot chocolate, yes. If it was endless, maybe, but it always seems to end, and I always get cold. So therein
Yeah.
lies the problem.
No, you're right.
Absolutely.
And it's a problem when you're trying to go on a no sugar diet, which is something I try to do and fail. So,
I wouldn't even try, but good for
Ah,
you for trying.
no, I'm with Jodine. I'm not trying a no sugar diet. I would fail within probably the first hour.
Yeah,
Being generous at giving myself an hour.
an hour. Yeah, yeah, yeah.
Yeah,
Couple
totally.
minutes for me for sure. I'd probably do it unintentionally too.
Yeah. My idea of the no sugar diet is sleeping. That's it.
that's the only time without sugar.
That's the only time I'm successful. As long as I'm sleeping, I can be successful in that diet. That'll be about it.
I just realized that I did not open my window all day today, and I did not see the sun at all. Was it
Uh,
even sunny out? I feel like it was kind of cloudy today, right? Yeah.
it was
I would have
heavy
noticed.
fog this morning. It was awful. Not fun for driving, that's for sure.
Well, we are almost approaching 5 p.m. and it looks like we have some people trickling in. And
Yeah,
we're also live on YouTube. So we've got some of our people joining in through YouTube today as well.
that's wonderful. That's always good to hear.
Yeah, and Carrie, it's good to have you back too. Well, at least I don't know. I haven't been on video for After Hours for quite some time, so it's good to
Yeah.
see your face again and kind of be doing this today with you. And
Oh, thank you. Well, it's always a pleasure when you guys invite me to come either to the daytime programming or to your after hours programming. It's always fun. I always enjoy joining everyone. So thank you for having me again.
well, it is 5 o'clock, so let's get us started. Welcome to Family Law Now After Hours, everybody. Today, our topic is the role of forensic accounting in divorce.
Mm.
We have lovely Carrie Heinzl joining us today. Thank you, Carrie. And before we begin, please note the purpose of this series is to discuss general information on separation, divorce, and family law matters. Any information provided today should not be considered as legal advice. If you do have any questions regarding your specific matter, please call our office or a lawyer in your area to book a consultation to receive tailored advice. And stay tuned until the end, as I will be sharing how you can schedule a free consultation with one of our lawyers. I will now move on to the bios for our speakers today. We have Carrie Heinzl joining us. She is the founder of Fairmore Family Law Financial Solutions. Fairmore offers independent, fact-based financial analytics and settlement insights to individuals and couples working through separation and divorce. Carrie is an active collaborative process trainer, co-teaching the introductory program for new collaborative professionals and advanced level trainings for seasoned practitioners. She sits on the board of directors for York and Durham Collaborative Practice and is the president-elect of the OACP. Carrie has taught statistics, research methodologies, and psychology at college and university levels. In addition, she has presented at conferences for the Ontario Association of Collaborative Professionals, Family Dispute Resolution, Institute of Ontario Annual Conference, and the International Academy of Collaborative Professionals. We also have Jodeen with us. Jodeen is an articling student at RIA. She's one of the newest members of our team. Jodeen has already gained valuable experience across both collaborative and litigation files. Her legal journey began at Queen's University, where she honed her advocacy skills through roles at Neighborhood Legal Services Legal Clinic and the Family and Children Services of Frontenac, Lennox, and Addington. These experiences helped her develop a keen ability to navigate complex legal issues with empathy and insight. There's also me. I'm a family lawyer with a strong focus on compassionate and effective legal representation. My background in business management enhances my approach to legal matters. I excel in negotiation, achieving settlements through strategic dialogue and strong advocacy from my clients. I prioritize clear communication, ensuring that the clients are informed and empowered throughout the legal process. Thank you, Jodeen and Carrie, for being here. I will get us started today for our topic and what we are talking about today, what we really mean by forensic accounting. Afterwards, I will drill Jodeen and Carrie with a lot of questions for our audience today. So stay tuned. Forensic accounting in a divorce is when experts use special accounting methods to dig into the finances, and they've tried to find money or assets that one or both people in a separation or divorce might not have fully disclosed. And the goal is to make sure everything from income to assets is fully revealed and fairly split during the divorce process. When people get married, they typically don't anticipate it ending in divorce. Some couples are able to part ways amicably, but there are others who are not. And so, in many cases, when one spouse knows that the marriage is perhaps nearing its end, some will start planning ahead. And these plans can include attempts to hide assets in an effort to retain full ownership of them after the divorce. And this can be motivated by any emotion. It could be anger, greed, a need for control. Um, and sometimes people who are trying to hide assets will go to great lengths to ensure that their partner doesn't get their fair share. And the longer someone has to prepare for the divorce and the more sophisticated their planning is, the harder it could be to uncover hidden assets. So, for instance, there's spouses who own businesses who may be in a position to be able to do that more effectively. But as family lawyers, we are skilled in handling divorce cases. Sometimes we do need expertise of professionals to help us with tracing these assets and these incomes. Our expertise is guiding clients through the legal process, but when it comes to uncovering hidden assets, we may turn to forensic accountants. And these experts are trained to examine these financial records at a much deeper level. And so they're able to dig beneath the surface and search for any financial misdeeds and hidden assets. So they function like financial detectives, right, Carrie?
Something like that.
So that's what we are talking about today. Uh, before we go in, Jodeen, if you can kind of speak a bit more, on family side of it and how we seek financial disclosure from our clients and why financial transparency, is important in a divorce process.
Thanks, Shanza. So when navigating divorce or separation, at its core is at the core of a fair resolution is full and frank financial disclosure. So whether you're working towards an amicable settlement or you're going through the court process, full and accurate financial disclosure is not just a formality, it's a necessity. So we can start with the basics. Financial disclosure involves providing detailed, accurate information about your income, expenses, assets, and debts. These aren't just like numbers that you put on a page. Documenting your finances is an important way in which the necessary foundation for decisions about property division, child support, spousal support can be made. So in Ontario, we have what's called Rule 13 in the family law rules, and that lays out the necessity of financial disclosure in family law proceedings, whether it be in court or out of court. We want to try to abide by those rules, not try, we must. Both parties must file accurate sworn financial statements because this is a legal obligation. But why is this so important? I put together a few reasons. I think financial disclosure is important. First, without full and frank financial disclosure, fairness will be impossible. Imagine trying to divide your assets when one party hides accounts or undervalues a property. How can you ensure that there's going to be division if just division if the true financial picture isn't clear. You just can't. So at least one party in that situation would be disadvantaged as a result. Second, when it comes to support calculations, that also depends on honesty. If income is understated or debts are inflated, the resulting child or spousal support payments may be too low, leaving one party and the children at a disadvantage. And also this whole process of hiding finances, it's a waste of time and money because the parties are going to have to spend to ensure that whatever was hidden comes to light, and the burden of hiring experts and unfortunately where it's not needed, where we could have just had full disclosure, is really just exhausting emotionally, financially, and then it can add actually to the underlying tension between the parties, further distancing them from resolution. Now, I would say lastly, for me, I think that, well, from what I understand, courts take this very seriously. So if you end up not agreeing and you have to, go to court, the lack of honesty can lead to some serious consequences, like cost awards or even a finding of contempt, depending on the extent of the non-disclosure. So deliberate non-disclosure isn't just unfair, it breaches legal obligations, and it really messes with the legal process and just, coming to a fair resolution as well. So it's really important that, both parties be financially transparent in whichever process they choose to go through, whether they're going through settlement or they're, going through a litigation process. It's necessary to ensure that both parties can negotiate confidently, knowing that they have all the facts.
Yeah, no, thank you, Jodeen. I agree with everything you've said. Every
Thank you.
consultation I do, my first calls with my clients, I always tell them we are going to start with the disclosure and just how important it is. And this is regardless of, whether the file is in court or if my client is willing to waive some of their rights to these assets, because I want to make sure my client is making decisions with a clear picture of what the financials are, and there's complete transparency so they can make informed decisions, and vice versa. I want to make sure my client is disclosing everything, just so I am protecting them in the future from any claims that the other side may come back with if assets that should have been disclosed but weren't. And now the other side is back to attack the validity of any agreement that was previously reached because now they know about those assets. Jodeen, I'll give it back to you. If you can speak a bit more on how forensic accountants identify concealed assets and undisclosed income, which is something we just brought up. Perhaps you
Yes.
can speak more on the process and how do they know that there are hidden assets?
So I can speak about this briefly. As you mentioned earlier, financial transparency is not just a procedural step, but it's integral to fairness in family law. So whether we're resolving matters through negotiation, ADR, litigation, like we said, honesty and openness are non-negotiable. So even in cases where there's no sign of significant non-disclosure, forensic accountants can bring a layer of precision and just openness to the process. Their work is more than just crunching numbers. It seeks to uncover the truth behind figures. So how do they do it? Well, let's break it down. Forensic accountants can reconstruct financial histories by analyzing bank statements, tax returns, and other financial documents. They can piece together an accurate picture of, or somewhat accurate picture of a couple's net worth, as individuals and together. This includes identifying assets that may have been deliberately concealed or misrepresented. as Shanza said earlier, they also trace the origins of transactions and assets. This means following the money trail to determine whether certain assets were purchased using matrimonial funds, or if there has been an effort to hide or divert these assets. So they also can examine lifestyle, spending habits, right, to get a better picture of financial behavior. And then any discrepancies in that, we look into those discrepancies to see if there's any undisclosed income or hidden cash. They also, will look beyond the surface to see if there are any unreported earnings from investments, because that's sneaky. Sometimes it's not really just about the income, but whatever investment that they have that might be unreported, so that they can pinpoint what others like lawyers and sometimes law clerks aren't able to identify, because we're not trained financial experts like, forensic accountants. So the result of that would be a comprehensive financial picture that will allow for fair decision making, and a fair decision making about property division, support payments, and other financial obligations. Forensic accountants are not just for cases of suspected fraud, though. So we'll talk about this later, that forensic accountants can be very useful in ADR processes as well, and collaborative practice as well, to ensure that all financial information is verified and true, and so everyone involved can move forward with confidence in the fairness of the outcome. Thank you, Shanza.
Jodeen, I know, Carrie, do you want to add anything to what Jodeen said? And maybe if you can expand a bit more and go into some of the techniques on tracking these transactions that Jodeen just mentioned to identify asset ownership, and what does that look like?
Yeah, absolutely. I think the first thing that people have to understand, though, is hiding assets is not as common as people think. It's one of the things I think we hear about on every file that we take on, is that there's hidden assets, and it's really not that common. I've been practicing for 15 years, and I think we've found two where it's been a true hide of assets. So I think it's really important that people understand that it's not as prevalent as people may think it is. But having said that, when we do all of a sudden come up with somebody that, maybe we need to delve a little bit deeper into things, or in our case, there are certain things that my office can do. And then there are other times where we're saying we actually need to hire somebody that's even has more expertise than our office does. And so when people are tracking financial and clarifying assets of ownerships, some of the techniques that a forensic accountant will use, or even our office may use, is the first thing we're going to look at is bank reconciliations. So we're going to compare those bank statements with the company records. So if they have their own company, they're going to be looking at the bank statements and the company records, and they're going to identify any discrepancies to ensure that all the transactions are accounted for. So it's when those transactions aren't there, that kind of is a little bit of a red flag. Some of the things that they're going to do with those transactions is a little bit of an analysis. So they're going to review the individual transactions, and they're going to verify that they're legitimate and ensure that they're properly recorded. So some of the things that might come up that somebody's saying is a red flag, there might be trips, for example. Something's been put through the company, and maybe it's not quite a company expense, or maybe this is something that should have been disclosed to the family as it's been money being diverted. We're also going to look at electronic fund transfers monitoring. So tracking electronic payments and receipts to detect unauthorized or unusual activities. Sometimes companies are so busy that they may not even see this stuff coming through, and it may not even be the owner that's doing it. There's so much fraud out there right now that having somebody go through and find these, sometimes it has nothing to do with the actual owner. It has to do with something else that's going on. And so sometimes picking that up is not a bad thing either. They're going to look for audit trails. So maintaining those detailed records of financial transactions, and you're going to trace the origin and the destination. You know, there's been times when all of a sudden you're going through everything and something's just not adding up. And it's about going back and painstakingly sometimes going through and saying, this is, and you working backwards, going, okay, this is where we've ended up. Now, where are we going to take this from? And then there's also the forensic data analytics, and they're using advanced software to analyze large volumes of transactions, and they're going to look for patterns and anomalies within that. But sometimes with all of this, it's like, well, who actually has the ownership? That's part of our problem that we're having. And really easy techniques. Sometimes title ownerships are really easy. And we can do this even with properties. So sometimes we'll have clients going, I know I'm a co-owner, and they're actually not a co-owner at all. And it's really easily verified with simple property searches. We can do it. We can do ownerships of business can be also searched for in Ontario. Nice and easy to do. It doesn't take up too much time, and the costs are actually really reasonable. They're not a lot of money to actually find out for sure who actually owns this and how does that work out. So you're going to do public record review, which is a little bit of what I just said. You're going to look at public records. You're going to look for if there's mortgages. Are they registered to properties? Where are the deeds? Are the deeds registered to the people they say they're registered to? Are there people registered on properties that actually nobody knew they were registered? So this might be a parent that ended up being registered or somebody else in the family. We want to look to see if there's liens. Has there been major debts that have happened in the relationship, and or they have borrowed large sums of money against the property? We want to see if those things are identifiable as well. So sometimes with asset tracing, it's following the trail of funds and assets to determine who is the true owner. And this can happen with, of course, fraud and hidden assets. Somebody may say, I don't own that. That's not mine. So we're going to have to go back and find the trail. It's like, well, why are we talking about it if it's not yours? So it's about finding out the why behind things. And that's really important for people to understand what's going on. It's simply the why. Why is this like this? Why are we looking at this? Why is this an issue, or why isn't this an issue? And sometimes it's just that verification that somebody needs to move on. They don't necessarily need the full dig. You just go, oh, okay, oh, I remember that. And a lot of this is about a little bit of a memory jog for a lot of people too. Sometimes also in clarifying asset ownership, there's going to be a legal agreement review. So we're going to look at contracts. We're going to look at trust arrangements. We're going to look at other legal documents that say who's the ownership, who has the rights and responsibilities. So that might be a partnership agreement. That might be who actually has the legal entity. Sometimes it's not what you see. And then the last, it's going to be interviews, and some of these firms will also do depositions and things like that. They're going to be gathering information for other people in the company or other people around them that might be involved in the ownership. And this can be especially true if there's multiple ownerships of an asset. So somebody might be saying, oh, I only own 1%, but there's 5 people there, and they're like going, no, 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 we all own 20%. So sometimes people will under or overinflate their worth. So we want to look at that as well. So that's some of the techniques that get used.
Thank you, Carrie. A lot of times people don't understand all these things, so it's good to have the professionals kind of assist understand where and what to look for and what is worth pursuing. I know you just talked about assets. What about income? So what if there are concerns about a spouse hiding their income, not disclosing their income properly? Especially when we talk about people who run their own businesses and they have that control over their financials. How do you assess income for these individuals?
Yeah, it's a great question. One of the things I do want to say about the assets and on income, it is possible that no matter who you're hiring, if it's our firm, if you're hiring a bigger forensic accounting firms or any of that stuff, it is possible that not everything always gets found. There is no guarantee, because some people are just really, really good at hiding it. And sometimes you can't find it. So I do want to make sure that we're prefacing that with this. There's no guarantees that everything will be found. And one of the hardest things to find is cash. And that is the absolute hardest. And that goes to say when we're doing incomes as well. One of the things that most people have to understand is that there are two people in a relationship. And so when I have one person that says, nope, didn't do any cash jobs, and somebody else is saying, well, we always had like stacks of cash like this sitting in the house safe, or that they were always bringing home a lot of the cash, that we want to look at a little bit deeper, both on the asset side and on the income side. But some of the strategies that get used in accurately looking at income, and this is especially for business owners, it's going to be a detailed examination of their financial statements. Financial statements are a great wealth of information. They're telling us exactly where things are going. So if somebody, for example, has their business and we know it's being run out of their house, but there's this wonderful point where they're charging out the utilities through the business, we might say, well, geez, that's a really good place for income. Or if somebody's putting large amounts through for vehicles, and we know that they are maybe a data analyst, or they're doing something that requires them to sit in front of their desk all day long and not really see clients or going out anywhere, maybe that big vehicle expense might be a little bit much and needs to be added into the income. Whereas if they're a real estate agent, absolutely, you need your car, go for it, go and have fun. So that's something that we're going to look at, and that's something that we look at, and it's very well documented on financial statements. A little bit of another thing that we might do is a little bit of data mining. So that involves extracting large sets of transactions to identify patterns and anomalies. So there might be some algorithms, there might be learning tools to detect those irregularities that might go unnoticed in a traditional audit. It's not something that's used very often, to be honest with you. We're going to look at trends. We're going to look at the financial data over time. So where have things changed? Did in the year before separation, all of a sudden there would be these giant changes? Like, do we need to look at that? Why was everything steady along here, but then all of a sudden there's a big change? Now, where we might see that is, and I always laugh, is, we did have a major pandemic that had a big effect on a lot of people's incomes for a while. So we want to make sure that we're checking that out. And also, were they negatively or positively impacted on something such as the pandemic? And how is that affecting their income now? And when we're looking at those trends, is it fair to be including that in the analysis? So we want to look at those. Some forensic accountants may use a ratio analysis. So they're going to compare financial ratios over different periods and help with those anomalies like I just talked about. So they may have abnormally high accounts receivables. Turnover rates may be indicating that there's maybe some fictitious sales. These are things that will all of a sudden kind of pop up, and it's like, well, why is that all of a sudden there where it wasn't there before? There again, it's going to be some interviews with employees and management if they are available, and if that's the nature of the business, they might be doing that. Sometimes this might be probing, other business partners. You're looking at the general ledger statements, and it's showing all sorts of food and all of these sorts of things, and it's like, oh yeah, they always put their grocery bill through the company, whereas I don't do that. So it's playing those things against each other. Sometimes they're going to look at electronic data such as emails and transaction logs to help uncover hidden assets and funds. So they might be doing that. They might do some predictive modeling, saying based on historical data, this is what can be expected going forward. There's going to be a little bit of behavioral analysis going on. So the individual behavior within the organization, they might have patterns that are deviating from the norm that might indicate that maybe they're not disclosing things, or they might be hiding things, or that there's a little bit of fraudulent activity going on. So those are some of the things that we're going to look at, or a forensic person may look at when we're trying to figure out and assess income. One other thing though about income that's really important for people to understand, especially business owners. What you claim to the CRA is not what we're necessarily going to use for your income for family law purposes. Those are two different things. I'm all for people, you know what, where however you can legally get your income as low as possible to pay tax on, I say go for that. But then realize that although it's a legitimate claim you're putting into the CRA, it may be something that gets added back to your income for support purposes. And phones, meals and entertainment, travel, these are all things that are really big about that would get added back for somebody's income.
Thanks, Carrie. That's a great insight into the process of what can be going on behind the
Yeah.
in the brains of a financial professional. And staying on the topic of, hiding income, another thing that we deal with, Carrie, is we have clients with spouses who doesn't seem to be making too much, but their lifestyle doesn't really match with what they're disclosing. So there's this whole lifestyle analysis that can come into play to help identify the complete financial picture. We are trying to balance what is being disclosed versus how much the spouse is really making based on their expenditure, their lifestyle. From the law side of things, we have Carrie, you mentioned this too. We have the financial statements, and Jodeen, you talked about it, the Form 13, that give us more insight into a person's income, their expenses, and as lawyers, we attempt to use this information to understand the money movement, where the money is going towards the expenses, what the income is, what's the budget, what's affordable, what's not. The whole idea is to do this analysis to understand if someone is hiding income or if there are any such concerns that are worth bringing up. And so it can help make arguments with numbers if you do have those concerns. This can impact support claims, if you're going through a separation. From a financial side of thing, Carrie, is there anything you look for specifically or any comments on how the numbers kind of speak to you on
Yeah.
lifestyle and reported versus actual spending?
Yeah, looking at lifestyle is really important because it's not uncommon for us to see somebody saying, I make 65,000 a year. And then we get through their financial statement. I'm looking at their budget and I'm like, going, but it says your burn rate in a year is 175,000. So how are you supporting this number, especially if your spouse doesn't work at all or has a minimal job that doesn't support that same value? So we start looking at that. My first thing that I do is I run to the assets. That's the first thing that I'm going to look at and go, are we burning through assets? Is this a temporary thing that's going on? Are they borrowing from family? Do they have a large inheritance that maybe that's how they're running through? We want to go to the obvious first. We don't want to just naturally assume that somebody's lifestyle is supported by something that's a little bit more nefarious. We want to make sure that, okay, there's an explanation that happens. But if we're not satisfied with what's going on there, we might want to dig a little bit deeper, or we might get the forensic accountants to dig a little deeper. And we're going to look at a comprehensive financial profile. And this is started by developing a detailed financial profile of the individual in question. So this is going to be analyzing bank statements, credit card transactions, and other financial records to understand their income and expenses. These people might be living in the world of debt, and that it may not be that it's a hidden income. It's that they're going, hey, and we've had a lot of this when money was really, really cheap, when we're having like 1% and 2% on interest rates, no problem. People were running up the debt and didn't think twice about it. So that's what part of it is, looking at that. So we're looking at that expenditure analysis as well. So identify spending patterns that might not align with, the reported income. They may have an expenditure for something like a country club, but they make minimum wage. And it's like, well, how do you afford the country club if you're making minimum wage? Those things don't really go together. So if somebody's spending significantly more than the reported income allowed, it would suggest maybe there's an unreported income there. We also want to look at bank deposits. So it's looking at all the bank deposits, canceled checks, and currency transactions. Are they putting money into other currencies, US or euros or something else? or bringing money in. So sometimes what it is they may have a family member that lives overseas and they're simply bringing in money to them. They're sending them the money. So, and I have seen this before where it was a really easy explanation. We had a father that lived in Hong Kong sending his son money on almost on a monthly basis. So he was getting basically an allowance from a father that allowed the lifestyle to continue. So we're going to look at that. Also, you know, some people do end up depositing, making the cash payments into their bank accounts. So sometimes that's where the cash is coming from. So we want to look at those things. We want to look at gifts. We want to look at loans from family members. So some of this might be unreported income, or it may just be a family member helping them out so that they can sustain a lifestyle that maybe they shouldn't be sustaining. We want to look at their net worth. That method is comparing the individual's known assets and liabilities with the reported income, and that might be something that we look at. Any unexplained, though, increases in net worth might indicate a hidden income, so that they're getting something from a side hustle that they're maybe not reporting out to everybody else. Not very common. Most spouses know if there's a side hustle going on, that's for sure. Also want to look at their social media. Social media has become a big deal in family law about people and what they're doing. So we might want to review social media posts and public records to see if the individual's lifestyle and spending habits. So if all of a sudden they're posting pictures that they're on a mega yacht somewhere, it might be, well, how'd you get to the mega yacht? Was this you spending it, or is this somebody else spending it? So the AI pictures that you see sometimes might not be your best friend on social media if that's what you're posting. So you might want to be careful about that. Also, there's interviews, things like that, they might talk to friends, they might talk to family, they might talk to business associates, just to get some additional insights into the person's financial habits and any potential discrepancies.
Thank you, Carrie. Talking about all of this, like all these concerns and going into the kind of the weeds of the, financial structures that there are, what are some of the ways people can kind of safeguard themselves from financial misrepresentation? Do you have any tips for people today? Like, what can they do?
Yeah, so there's a lot of things that you can do. I think, yes, you can obviously hire a forensic accountant to go through everything, but like I said, this is not as commonplace. It's also more commonplace though with very, very high net worth people, and not so much with kind of our everyday families and everything that's around. But like a higher net worth, you're gonna see more people wanting to hire that forensic accountant. Maintain detailed records. This is a great way of doing things, like keep your bank statements, keep your tax returns, keep your receipts. Maintaining some good detailed, having good financial hygiene is a great way to save yourself and safeguard yourself. Some of the issues that we hear almost daily is that is one spouse saying, "I didn't know, the other person handled everything." And that's why hiring a company like mine is not a bad idea, because we're going to start uncovering that stuff. And when we see really big issues, that's when we're going to have the conversation about hiring additional people into the file. It's not common though, but it happens every now and then. I know people don't think it's very romantic. And I really don't like the term prenuptial agreement. I prefer the term relationship agreements. But honestly, these great agreements are fantastic, especially if you're bringing a lot of stuff into a relationship. Whether you're getting married, you're just going to live together, have an open and honest conversation at the beginning of your relationship. There's actually been studies done in the US that have shown that couples that actually do relationship agreements actually have a better stay rate in the relationship than couples that don't, because they're having those big, honest conversations at the start. I personally like to call them 3D conversations, where you're going to talk about disability, you're going to talk about death, and you're going to talk about divorce. So it's a great conversation to have. I know it's not very romantic. I know it gets into all the icky stuff that people like, oh, but I don't want to talk about you becoming disabled. It happens. People die in a relationship. and people get divorced. So it's a great conversation to have. And while you're in that good phase, it's a good time to do it. So I highly recommend them. Ask my kids, they know I recommend them to them in their relationships as well. Monitor your joint accounts. Just assume that everything is hunky-dory and the other person, you know what's going on. Numerous times I go, I didn't know that they took, 50,000 out of the line of credit. And it's like, well, how didn't you know? Your name's on the account. Oh, I never go into that account. I never use the account, but you're responsible for it. So just saying that you didn't know is not always good enough. You have the ability to find these things out. Go ahead and look. Even if it's just every quarter, like you go in every 3 or 4 months and have a boo at the accounts going, oh, everything's good. Keep yourself up to date. Always, always, always seek legal advice. Don't just try to muddle through. Sometimes it might be somebody that's going to say, you know what, you're okay. But at other times, you need that good legal advice. And it's always something that we advise all of our clients. We don't want any of our clients ever being without legal advice. We actually don't work with clients that don't have legal representation either. Do a lifestyle analysis, compare your own income to what you've been spending. If something seems off to you, it probably is. Our clients are the best indicators. They sit there and go, I never understood how we could afford, these lavish vacations. I never understood it when I thought this is all that the person made, or this is all that I made. So, do your own lifestyle analysis. Secure all your digital assets too. Make sure that you're doing okay with your passwords, and make sure your online banking is secured. Having recently on my personal side been hacked by hackers. They are very sophisticated. They are 2 steps ahead of the banks. So always making sure you are checking your own stuff. I'm a little bit neurotic about it. I will admit that. I check my banking daily, and just to catch anomalies. Maybe you don't have to do it that often. I do, just because I am completely paranoid about my own banking. So there's that. And at the end of the day, just be proactive. Don't wait for the issues to arise. If you know there's a way that you can prevent it, go for it. Know what you're up against. Know your financial literacy. If you're not sure, make sure you have, a financial planner. Make sure you have that person. Make sure you're talking to your bank. Make sure that you're looking after your own financial health. It's a big deal, and it'll help you in the long run. And it'll also help you when you're having to make decisions if you're in this process. My view is that people that have good information 100% of the time will make a good decision. That's about all I got.
Those were amazing, amazing points. And, that's why I tell people, stay up to date, seek help if you're unsure. And sometimes, like, we have people who are married, right? And sometimes people think it's too late to get a prenup. Well, you can get a marriage contract. It doesn't have to be before you get married, right? So if you have concerns after you've been married that there might be some financial, something's going on the other side, seek help. Hire a professional if you're unsure. Go to a financial professional, hire a lawyer if you feel like you might need that contract crafted. It's always best to make an informed decision than delay any red flags, or if you have any concerns, just it's best to seek that help.
Yeah,
Well, we
absolutely.
are a family law now after our series, so it's time to talk about the legal implications of forensic discoveries in family law. And I know Jodeen kind of gave us a bit of an intro there too, so thank you, Jodeen. I'm just going to expand on that a little bit more. In family law, when a couple separates or divorces, you're supposed to divide your property that was accumulated during the marriage. The process involves calculating each spouse's net family property value, which basically is the value of all your assets and debts at the time of separation. Forensic discoveries and, making sure that there is complete financial disclosure is important because it directly impacts your and your spouse's net family property, and that will impact how much equalization the receiving party will get. Right? For this process, by law, both spouses are required to fully disclose their assets, liabilities, and income, which is what Jodeen mentioned earlier, to make sure that there is a fair division of assets. If one spouse, they decide to hide their assets or they provide false information, the fairness of the process is obviously compromised. This is why, having the forensic discovery is important to uncover those hidden assets or any undisclosed information, or just making sure that the disclosure is done properly and everything is accounted for. It's very easy for people to make mistakes. This is not something they do every day. So, making sure you have, a lawyer kind of helping you through the process can be very helpful. When the financial disclosure has been made, the court may order, like I said, an equalization payment from one spouse to the other. If hidden assets are uncovered, this will change the amount of this payment. And so that's another reason you want to make sure that everything is properly accounted for. Now, when it comes to property division, and the calculation for the equalization payment, there are also excluded assets under the law. This includes inheritance and gifts, which are excluded from property division. However, if these assets are commingled with family funds, then they lose the exception, which is another reason you might want to make sure you have the proper financial picture, because that can be used to ensure if certain assets should be excluded or if they were mixed up into the shared property pool, which will make them part of the NFP and the equalization payment, and so they're going to lose that status as an excluded asset. This is why another reason we want to make sure all the assets are disclosed and how they're dealt with, to make sure everything is accounted for. Another thing to think about is legal consequences of hiding assets, court penalties. If it is revealed that one spouse intentionally did not disclose their assets or they were not truthful about their financial situation, the court can impose consequences. And, this can look like, payment of a cost award, um, related to, the legal proceeding itself, or perhaps even more, maybe the money and time spent on the financial investigation to kind of uncover those assets. We are looking, if one party is found to have intentionally concealed assets, the court may also draw adverse inferences, meaning that they can assume that the hidden assets are more valuable than they were initially reported, which can result in a more unfavorable outcome for the party who decided to conceal those assets. Let's also talk about spousal support. Spousal support it's meant to ensure that the lower earning spouse is financially supported after a separation or divorce. The amount and duration of spousal support can depend on a number of factors, looking at the payer's income and their ability to pay. And so making sure that we have the right income from the payer spouse will ensure that the support is calculated accurately. We may be dealing with a case where a spouse may try to underreport their income, especially if they are self-employed. We've talked about that, Carrie. Thank you for all the information you gave us. And so, tracing that income could be important to make sure that the spousal support calculations are properly done and not on a falsely reported income figure. Having a full, complete financial picture can also reveal whether the pair spouse has the capacity to pay support, if they have multiple income streams, if there was cash income sources that were not disclosed. All of that will be, hopefully, will be reflected to make sure we have their actual financial situation, so that the support calculations can be properly done. Again, similarly to what I said earlier, there can be, legal consequences if you are hiding income. And again, we are looking at support orders that could be retroactive if income was previously not disclosed properly, and then later on it is found that the income was higher than what was initially reported. And remember, full financial disclosure is a legal requirement. The law requires full and honest disclosure of assets and income. Forensic discoveries ensure compliance with the legal requirements. The ultimate goal of family law is to reach fair and reasonable outcomes for both spouses. So if you feel like your spouse is hiding assets or income, if you feel like there are valid concerns in regards to that, it is best to talk to your lawyer or talk to a financial professional, and kind of let them take it from there, kind of assist you if there are any reasons to investigate any further. Okay, so Jodeen, perhaps you can talk a bit more about, let's say, someone feel like they need a professional come in, right? And they have these concerns. How can they go about doing that? Maybe you can speak on collaborative law, or any other consideration that people should have in their minds as they decide to pick a professional or go through this route.
Oh, okay. Yeah, sure. I can talk a bit more about collaborative law. And I was thinking about when I first met you, Carrie, and it was in observing a collaborative law process. That's what it was. That's where we first met. So collaborative law is an out-of-court dispute resolution process. It's something that we do here at Russell Alexander Collaborative Family Lawyers. Surprise, surprise. And it encourages spouses to work together outside the court system to resolve their issues that arise out of separation amicably. That's the goal anyway. In collaborative practice, lawyers and parties will end up signing an agreement that is intended to align with everyone's interests in resolution. It specifically states that collaborative practice lawyers and other professional team members involved in this process will ultimately be disqualified from participating should you end up going to court if the collaborative process ends without reaching an agreement. So ultimately, this is an approach which relies on open communication, transparency, and mutual respect, with each spouse assembling a team of professionals who work collectively to achieve an equitable settlement. The collaborative team can include, in addition to the parties and their lawyers, can include neutrals. And then so the process relies on the expertise of those neutral professionals, such as neutral financial professionals, divorce coaches, or even child specialists or therapists, things like that, that can help holistically throughout the process. Because at the end of the day, it's about interests and not positions. You're really not trying to like one up the other person. It's a very forward-thinking process. Collaborative family law is. So for a financial professional, in the collaborative family process, they will act as a neutral, and they will provide valuable insight into financial planning and decision-making to ensure transparency. It's not really about taking sides. They don't want to create conflict. Instead, their goal is to provide a clear financial picture so that we know what the assets and liabilities are, so we can come to a joint resolution. Financial neutrals can also help in situations involving refinancing and maybe giving you more information about mortgages or other debt issues. I'm sure Carrie can speak a bit more on this. This is our bread and butter every day. So yeah, just demystifying some financial intricacies that may come up, things that people may have, neglected, and maybe there's some further explanation that's needed about some weird financial discrepancy in your statements or something like that, just to get that resolved so that the process can move forward more seamlessly. So I would say that when choosing a financial professional to be involved in the collaborative process, you'll want to look for someone who's experienced in family law matters and skilled in navigating financial complexities. and also committed to a collaborative process, because that's important. If you're looking to move through the collaborative process, it has to be that everyone involved is committed to the process, and not taking sides or looking to make the matter litigious unnecessarily. So this is something that a family lawyer can help you with, to identify the right candidate for you. And also, I think we've stressed a lot that financial disclosure and sharing information, sharing it promptly, and coming to meetings with an open mind is important throughout the process. The goal is not just about, as Carrie says, it's not often that there are hidden assets, but we need to ensure that the process creates a fair resolution that respects both parties' financial futures. So that's what I got for you, Shanza. I'll
No,
throw it
thank
back to
you.
you.
Thank you, Jodeen. This is a great way to end this day, kind of giving your suggestions and comments on how people can, move forward if they do have concerns, any financially motivated concerns. Um, well, I think that is all for today, unless Carrie, Jadine, you want to say any final comments or remarks, but just want to thank everyone for tuning into Family Law Now After Hours. Following the session, we will have a brief survey up here, allowing you to share your comments and suggestions for future topics that you would like to explore. Your feedback is greatly appreciated. You can book a complimentary consultation with one of our lawyers. Please contact our intake team at intake@russellalexander.com and provide them with the code RIA 2024 to schedule your appointment. You have until Friday to do so. Your appointment doesn't have to be by this Friday, but you would want to make that call by this Friday. Registration will be open for our next event as well. Just go to russellalexander.com/familylawnow. Thank you again, Carrie and Jodeen, for joining us today and sharing your wonderful insights. And thank you to our audience for tuning into our Family Law Now After Hours. Have a good night, everyone.
Thank you.